payment processing, an industry ripe for disruption. Hello everyone, welcome to Industry Focus. This is Gaby Lapera in the studio, and joining me on the phone is John Maxfield. I'm sorry, you guys are going to have to bear with me today because I'm a little bit sick. I'm going to try and keep the coughing down to a minimum. Today we're kind of doing a follow-up episode. I don't know if you guys remember, we interviewed Mr. Oxman from the Payment Processing Foundation. No, that's not the name of it. But anyway, it was a very, very interesting episode where we talked about how payment processors worked and what was upcoming in the field. And a listener from New Orleans, he wrote in and said that while it was very, very interesting, he was kind of upset that we hadn't had a chance to discuss the relative merits of the companies mentioned in the podcast, which he's right. But I guess between me and the listeners and you, Maxfield, it's always kind of hard to talk about whether or not you think a company is going to succeed, because when you have a lobbyist in the room, right? Because
they think they're all going to succeed,
right? And that's their job. So, and I think he did a really excellent job of kind of explaining what was coming in the field. But he's not gonna shoot himself in the foot by saying, yeah, you know what? I really think that I don't know, Venmo is going to succeed. So anyway, let's just do kind of a little bit of a recap. The payment processing, the whole way that it works, you have four kind of distinct parties involved, right? You have the issuer, the acquirer, the consumer, and the merchant. Do you want to talk a little bit more about that, Maxfield?
Yeah. So when you talk about what are payments, or what is payments? I don't even know, to be honest with you, if that's a plural or a singular noun. But let's say it's plural, just because it sounds better. So what are payments? Payments is basically just what it sounds like. You have me, I go to a store, right, and I buy something with my credit card, so I'm a consumer. Then you have the store, which is the merchant that is actually takes the transaction. But then I have my bank, and the merchant has their bank. And what the payment system does, companies like Visa, MasterCard, American Express, is they tie all of these things together. They provide kind of the technological infrastructure underlying that. So when I go and pay, they take the money from my bank. So the merchant lets everybody know, and they take the money from my bank, and then they put it into the merchant's bank. And that's basically just what the payment system is.
Right. So in this case, in the scenario that I kind of constructed before, Visa, MasterCard, and Amex are kind of issuers, they issue the credit cards. And then the acquirer, the end acquirer, is going to be the merchant's bank, right?
Right.
Yeah. So let's talk a little bit about Amex, Visa, and MasterCard. These are kind of the big players in the credit card field right now. There's also Discover, but Discover doesn't really make that much money.
Yeah, and to kind of put it in perspective, this is really an oligopoly is what this market is, right? With these three really big players on top, and it can put some numbers to it. So Visa in 2014, which is, if you look at their 2015 10K, it's the most recent kind of competitive landscape data that they give. So in 2014, they processed 98 billion transactions, okay? Equal to $4.7 trillion worth in transactions. Second was MasterCard at 60 billion transactions and $3.3 trillion worth. And then Amex was at 6.7 billion transactions worth roughly $1 trillion. But then Discover comes quite a ways down at 2.4 billion transactions, so roughly a third of Amex. So when you're thinking about the payments landscape, you're really talking about, right now at least, Visa, MasterCard, and American Express.
Right, and this is actually really interesting, right? Because Visa and MasterCard are on what's called an open loop system, whereas Amex is on a closed loop system. So the way they make money is actually slightly different.
Right, that's exactly right. So Visa and MasterCard, all they do is provide these services that connect everybody together, and then they just take a little cut from that. But the closed loop system, which is what Amex does, is they also provide the banking services. So if you look at, where you can really see the difference between these business models is if you look at their income statement. So Visa, MasterCard, all of their income comes in basically services fees, whereas at American Express, I think it's roughly a fifth of their income also comes from net interest income. And that is, so you have a credit card, you have the credit card loan underlying the credit card, Well, as opposed to that loan sitting on a bank at, say, Bank of America, Citigroup, or JP Morgan, or Wells Fargo, that American Express actually houses that loan itself. So it gets the interest payments on that.
Which is a great business model if you can swing it. But with Amex, one of the issues is that they charge higher fees to have it.
Yeah, exactly. I mean, their interchange fees are much higher. But the thing about American Express, and right now, is that it is in such flux because it's losing a substantial share of its credit card portfolio to Citigroup because it's losing that Costco relationship. So even now, like when you're going to be looking at the American Express numbers, they're going to be in a lot of flux.
Brief pause. For listeners who don't know, Costco used to have a branded credit card that they had in partnership with Amex, and Amex made a ton of money off of that for a long time.
Yeah, I mean, it was like a central part of American Express's business. But then when I think the agreement goes back 16 years or something like that. But then when it came up for renewal, they just couldn't come to terms on it, and Citigroup stepped in to take over that credit card portfolio.
Yeah, it's definitely really interesting. And one of the things so Amex, Visa, MasterCard, you're probably sitting there thinking like, yeah, I've already heard of all these companies. These facts that you're telling me are very interesting, but like, what are the opportunities here, right? Like, are there any opportunities for disruption? What are the competitive advantages of each relative company? That's probably, I hope, what you're thinking, because that's what we're going to talk about next.
Yeah, and just to kind of tee up this conversation, let me put all of this in perspective. So Visa, okay, their operating margin, which is basically their revenue minus all their operating expenses, is 65%. Okay. Now, when you think about like in your head, like, well, what is 65? Is that great? Is that bad? Well, then if you think about like, well, let's compare it to another company that probably has really, really amazing margins. Let's compare it to Google. Google's operating margin is 27%. Okay. So again, Visa's operating margin is 65%. Google, which according to Charlie Munger probably has the greatest, competitive moat of any company of all time, their operating margin is 27%. So this just goes to show how powerful of a position these three companies, Visa, American Express, and MasterCard, have in that market.
Yeah, and it's easy for them. I mean, one, they have like this huge amount of market share too, but it's also easy for them to have such a large operating margin because it's not like it's a high cost for them to provide these services. Like once you have the infrastructure in place, they can make bank, which is what they're doing.
Yeah, and that's right. And a really good lesson here is that, it's almost like a software company, right? I mean, once you've made the software, and in Visa's case, once you've established that infrastructure, then it's just a matter of scaling, right? So if you can scale it up to $1 trillion $1 trillion worth of payments as opposed to 100 billion or 4.7 trillion, I mean, you're just going to make a lot more money, but your expenses aren't going to ratchet up very quickly at all.
Right. They're not gonna rise at the same rate as the amount of money that you're bringing in, which is huge for Visa. And this is actually one of the competitive advantages, right, that Visa and Amex and MasterCard do have, is that they do have these established infrastructure networks. Right.
I mean, when you think about competitive advantage, the network effect is the one that really comes to mind with these companies, right? Because they already have all these merchants tied into it. They already have the big banks tied into it. So they have those relationships and those networks that just make it easy. Because what Visa really does is it provides clearing and settlement services, right? And that requires people on both sides of the transaction to trust to trust the person that's providing that service. And Visa has established that. And so that network effect is clearly very, very powerful when you consider how wide that margin is, and thus how seemingly prone to disruption this industry is, but yet this fact that it's still not been disrupted.
Right. So far we've covered two different types of competitive advantages that these companies have, right? Which is the high capital investment required to even start building the infrastructure. And then once you have the infrastructure, the creation and maintenance of these networks that allow these companies to function, right? Like there's a lot of trust going on there, and there's also years and years and years of legal contracts that are binding these people together. This isn't something that's easy for a small upstart company to kind of break into.
Right, and the other thing you have is that, this is a service that is basically provided to banks, fundamentally is what it is. And when you go back to the beginning of Visa, what was Visa? Well, it was a consortium of banks coming together to provide the service. Well, nowadays, one of the other reasons that it'd be so hard to break into this is that it's not like the banks can come together, to do something like this again, to then maybe break the oligopoly that, American Express, Visa, MasterCard have, and they wouldn't be able to, presumably because of antitrust concerns.
Yeah, which kind of casts Visa and MasterCard the way they are now in a very interesting light.
It does. It's like kind of the other side of that. There's kind of antitrust, kind of questions on both sides of the coin here.
And I don't know if you remember this, but I believe Amex actually recently had to, or just finished a lawsuit where they were being subjected to antitrust claims.
I don't remember that, but it doesn't. Anytime you have such powerful players, I think antitrust is always kind of operating on the periphery.
Yeah. But anyway, so like I said, it's very hard for small companies to break into this space, which is why it's interesting that the people that you are seeing who might be disrupting the space are Apple and Walmart, of all people. Yeah.
I mean, and these are two. So you have Apple Pay, right, which is a payment system that operates over the iPhone. And then you have Walmart's kind of, I think, when we were looking at it, looks like it's it's in a very early stage, looks like in its beta phase. But currency, these are two very different things. And so here's the interesting things about Apple Pay. So when you think about Apple Pay, you think like, well, this clearly must be really disruptive, right? But what Apple Pay is fundamentally, and this is kind of how Visa explains it, is that it's just an on-ramp onto the existing infrastructure. So typically when you go to the store, you just use your credit card, right? You'd swipe it or you'd put it in one of those horrible chip readers that they're still trying to figure out how to make them take less than 2 minutes to process the information. But and then that's how you would access their network. Well, now with Apple Pay, the way it works is that you just put your Visa, your MasterCard, or your American Express, or Discover, or whatever it is, onto Apple Pay, and then it just uses near field communications to just do the same thing that you would be doing if you swiped your card. So it's just another way to access the existing infrastructure.
Yeah, which is really interesting, right? Because that kind of how disruptive is Apple Pay ultimately, right? Like maybe we get rid of our physical credit cards and that's it, right?
Right, and the other thing to keep in mind is that like if it's not one way to get a sense of how disruptive Apple Pay in particular is to look at what Visa, MasterCard, and these companies think about it, right? And when you look at Visa, MasterCard, and American Express, they're all on board with Apple Pay.
Oh yeah, they love it because it just means more payments for them, which is ultimately what they want.
Yeah, that's exactly right. So to them, they're seeing it as a benefit. But here's the thing, and we were talking about this before the show, is the question is like in the short term, right? It seems like a great way for Visa, MasterCard, and American Express to boost up their payment volume, to make payments easier, to reduce the amount of, the percentage of payments that are still to be done over cash and shift that over to their networks. So it seems like a great way to do that in the short run. But here's the question, right? Over the long run, let's say that Apple Pay really takes off, right? And let's say that everybody adopts this, right? With iPhones, the more people buy iPhones because they want to have access to it and all these different things. Well, at that point, then if you have them, a large share of all purchases going over Apple's network, that puts Apple in a really strong competitive position vis-a-vis MasterCard, Visa, and American Express. And you just have to wonder that, if Apple is able to position itself like that, if it would eventually start to charge more for using that on-ramp, if you will, to the existing payments network.
Yeah, it's definitely really interesting. Whereas currency, which is the product created by Walmart, that is still in beta test. I don't think you can get it unless you live in Columbus, Ohio, or I guess you can download it, but it's not going to do anything for you. It's trying to cut out the payment processors entirely. Like Walmart and its little consortium decided that they were spending too much money paying the credit card processors, and they were going to just cut out the middleman entirely and hook up customers' bank accounts directly to Walmart or whoever it is, and that way they could get paid directly without having to pay any service fees.
Yeah, I mean, and if you think about it, you think like, well, why would Walmart want to get involved with this? And But if you look at its income statement, right, and you look at its revenue, it earns like 400 plus billion dollars worth of revenue. And if these interchange fees, and it's a discount retailer, right? So it's the name of Walmart's game is to sell things as inexpensively as possible. Well, if you look at interchange fees, so they're anywhere from 1% to 3%, 3% being American Express, 1%, you know, on lower end of the spectrum, you have your Visas and your MasterCards. Well, that 1% to 3%, if Walmart could somehow take that out of the equation, so therefore just take Visa, MasterCard, and American Express totally out of the equation, it could drive down the cost to its consumers even more. So this is not, you know, a tangential thing for Walmart. This is a fundamental piece of its business. Now the question is whether it can get its own payment system, you know, up and going. But if it can, that's unquestionably bad news for Visa, MasterCard, and American Express.
Right, but of course there are other concerns with the Walmart system, right? So I don't know if you remember the QR codes from a few years ago.
I don't.
They're like these blocks that were just like speckled black and white things, and you could take a picture of it with your phone, and it would redirect you to a website or, I don't know, like give you something. I don't know. Do you remember like they would have it, and it's like take a picture with your smartphone, and it'll give you all this interesting information.
I remember exactly. I now know exactly what you're talking about.
Okay, the Walmart Currency app uses QR codes to make these payments.
Oh, it's like the 90s, but like not the 90s,
right.
like more like
it's like
probably
the early
2009.
2000s.
Yeah.
Exactly.
Like a blast from the past.
Exactly. And it's just kind of bulky, right? Because like Apple Pay, Google Wallet, Android Pay, all of those things operate using near field technology. You just hold up your phone to the PayPad, and it beams the information that it needs. Then they talk to each other, and that's it. Whereas with the Walmart thing, you actually have to pull up your QR code, and you have to like take a picture, or maybe the thing takes a picture. It's not 100% clear to me exactly how the QR codes work for the currency.
It seems clumsy though.
It does, exactly. It's just an extra step that you don't need to take right when you're just swiping a card or holding up your phone to pay, just tapping it. So
yeah, and yeah. Here's kind of another interesting thing in all of it. I mean, so talking about kind of evidently the clumsiness or the way that you know you have to access currency. You know, these new chip readers. If you think about Apple Pay coming at the same time, I mean, like I'm still like blown away by the fact that like they introduced this technology, and you know, I'm sure these are extremely smart people trying to figure this stuff out. But clearly, there's something in there with this chip readers that makes it difficult to process these things quickly. Because you put your card in, I mean, it could take 20, 30 seconds, right? And if you have a long line,
right,
I mean, that could take a while. So then you think like, oh, well, Apple Pay is coming at almost the exact same time, right? That you're adding all this additional time to this new credit card technology. And Apple Pay, evidently, I haven't tried it, but evidently it is almost instantaneous. So it's almost, you know, if anything, you would think that these new card readers are going to drive adoption of Apple Pay.
Yeah, maybe. Yeah, I mean, part of the reason it takes so long with the chip reader is because it's generating a new code for the transaction, that can only be used for that particular transaction, which is why it takes 20 to 30 seconds at a time to process, as opposed to just swiping where you're just transferring information off the magnetic strip. But with the Apple Pay, you're right, it would be a lot, or it is a lot faster. But another consideration to take into with the Apple Pay is that all the merchants, or most of the merchants in the MCX, which is the consortium that Walmart runs, have disabled the near field technology on their payment pads so that you can't use Apple Pay or Google Wallet or Android Pay at any of their stores. You have to use currency, and currency hasn't been rolled out to those stores yet.
So you basically have to just use either the swipe or the chip, it sounds like.
Yeah, in the majority of Walmart stores across the country. If you're in Columbus, Ohio, and you have the beta test of the currency, then you can use that at their stores. But you can't pay with Apple Pay anywhere else at any Walmart stores in the rest of the country. Like, they obviously don't want that, right? Because that would be competing with their network.
That's so interesting, because you could also see how like a company like Walmart, which makes its money on volume, would want to be pushing transactions through as quickly as possible. But yeah, that's so interesting, because you would think that like they would want to, if Apple Pay is significantly faster for a volume retailer, but then you have that the competing currency platform that they're trying to get it up and going. And I guess in their analysis, getting that up and going is more important than moving those lines.
Yeah. Do you want to hear? I just pulled up a list of merchants that are part of the Merchant Customer Exchange. Do you want to hear what some of them are?
Yeah, let's hear this.
Okay, we've got Wendy's, Wawa, 7-Eleven, Chili's, Baskin Robbins, Bed Bath & Beyond, Dunkin' Donuts, Exxon, CVS, obviously Walmart, Gap. Like, the list just goes on and on. Hy-Vee, which was my favorite grocery store in Nebraska. I don't think they exist in Virginia.
And wait, so let me get this straight. And so all of these have disabled near-field communications on their readers.
I'm not sure if all of those have. I know that Walmart definitely has.
Yeah.
But like, there's the potential for them for all of those merchants to disable the near field communications on theirs as well. If you're a listener and you have used near field communication, your Apple Pay or whatever, at any of the merchants I just listed, definitely write in, because I'm really interested on hearing about this. Right?
Yeah. I mean, and this is like, to just get back to all, like, I mean, this is such an unbelievable opportunity for disruption. Again, so you think that like something is going to get, whether it's currency or whatever it is, do you think that something is going to happen in this space at some point? And I think that's why so many fintech companies are focused on it.
Yeah.
So it'll be interesting to see if actually anybody can actually tap into it.
Yeah. Well, and the other thing that's really interesting about currency and Apple Pay is, are they going to be able to get people to adopt it, right? Because I mean, taking a piece of plastic out of your wallet and swiping it is pretty fast, and people are really used to it, right? So how are they going to convince people to change over? Yeah.
Well, and if they change over, what does that do for Apple's business model, right? I mean, think about what a powerful position it would be in, not only vis-a-vis the financial industry, but also vis-a-vis Android phones, right? Because if more and more people and more retailers are adopting Apple Pay, and Android doesn't come up with a product that is, I'm sure that they're working on it.
Well, Android does have Android Pay, I believe it's called.
Right.
But it's definitely, I don't think it has quite as big of a market share as Apple Pay does.
Yeah, and if you think about Android is, I mean, you have, Android, it's more all that kind of, those phones. The companies that make those phones are more focused on the hardware, right? Whereas Apple's got experience both the hardware and the software. So this is kind of a software side to it. You would just think that this is just a huge opportunity for a company like Apple to further tie people, its customers and new customers into its existing ecosystem.
That's really interesting that you say that, because my impression of Android is that they are a lot freer with what they allow to be done to their software. Like, they allow end product consumers to like take their software and modify it and create apps, and like their app store, I think, is a little bit more friendly to letting apps into it. So I know that a lot of my really big techie friends are really into Android, right? Because they can like do all these things to it that you can't do with Apple. Apple really does a pretty good job of like hiding its operating system and like how apps work. Like, it doesn't want you getting in there. You know what I mean?
Yeah. But if you think about like the average consumer,
that's
what is
true.
The average they want a seamless, experience that is really easy, where you have a really close integration between your software and your hardware. And it's that kind of closed system that differentiates Apple. So if it can marry yet another software element like iTunes, right? If it can marry another software element to its hardware products, it just seems like it would provide just yet another, brick, if you will, in its network, or network effects or its switching costs, with respect to its consumers.
Yeah, this is going to be a very interesting field to watch. There is one other thing that I wanted to talk about with currency before we kind of moved on, or I guess ended the show, because we're definitely running up against time, which is the safety issue from currency, because they are hooking up directly to your bank account. I don't know if there's any fraud protection associated with currency like you do have with like Visa and MasterCard. Even like companies like Venmo, they have, well, I guess Venmo belongs to, I want to say, PayPal now, but they do have some fraud protection built in, right? Like, if you report fraud happening, like, they will cover up to 50 or most of the costs except for $50, I think, depending on how much gets stolen. But I have heard of kind of horror stories with that too. So the question is, like, for an app that's hooking directly up to your bank account, because that's how it works, right? Like, they're not using the payment processing network. What kind of protections has Walmart kind of built in to make sure that nothing happens?
Yeah, and obviously I don't know the answer to that question, but I would venture to say that Walmart is all over it. You know what I mean? Or like to the extent that Walmart could be, because having the sanctity of your pay, the safety of your payments is a really important thing. And to kind of I mean, that's one of the reasons that people like Apple Pay so much, because again, I don't understand the technology, but the conversation out there is that Apple Pay is even more secure than these new chip card readers. So, it's just another area where they can differentiate themselves. So if Currency and Walmart isn't able to differentiate itself on the safety element, certainly they would come down a notch in the view of consumers relative to Apple Pay and the credit card companies.
Yeah. I think that Apple Pay and Currency definitely both have a long way to go in marketing themselves to consumers either way, because it took me a long time to find info on both of them. And it shouldn't be that hard to find information on a product that you're trying to sell to people.
Yeah, and maybe we're just dinosaurs, Maybe.
I know.
I don't use it.
I'm going to turn 27 in like 3 weeks, man.
Yeah,
like I basically have one foot in the grave.
You're approaching 30, and that's when it all ends. I remember when I was 14, I thought, like, oh my God, there's like a guy who lived down the street who was like 30. I was like, oh, that guy is so old. But certainly, like, the more the people adopt it, it's just I think that builds on itself in somewhat of a snowball effect.
Yeah. Well, this is something that we're definitely going to have to keep an eye on. Thank you very, very much for joining us this week, John. As usual, people on the program may have interests in the stocks that we talk about. Don't buy or sell based solely on what you hear. Thank you guys very much for joining us. Definitely email us to let us know how you're paying for your groceries this week. You can reach us at industryfocus@fool.com. Thank you very much and have a great week.